Hey everybody, welcome back to Swing Trading. My name is Mike Fairbourn, Senior Manager of Trading and Derivatives at Charles Schwab. Great to be with you folks. Hey, one thing we haven't talked about as of late, lately, is really kind of building that swing trade around growth. And I think it carries with it maybe an additional level of importance with kind of the market situation that we're in right now. A lot of volatility in the market and maybe volatility to increase in the future. And a lot of times, additional growth can be protective somewhat. Traders might look at that as an expectation. Stronger growth companies may in fact hold up better under different conditions. And so we're going to be looking at the swing trades today, but on those companies that are displaying maybe growth that leads their industry specifically. So look forward to going through that with you. Folks, welcome to Kevin. We've got Thea, Sharon, Scott, Michelle, we've got Zeno, Carla, Austin, and Riceberg. Welcome all. Good to have you here. Folks, any questions, comments you have, throw those into the chat so we can address those for you. We do have Barb Armstrong, a good friend and colleague of mine. It's great to have Barb on board. Jumping in, by the way, at short notice here to help out. So I appreciate Barb being here. Yeah, so any questions, comments you have, throw those in the chat. You could follow us both on X. You could follow Barb Armstrong. That's not Barbara Armstrong, it's Barb Armstrong. CS, Mike Fairbourn, CS, love to have you join us there if you're not already joined. And I know many of you are. So with that, let's do some disclosures so we can jump on into this and take a look at some potential swing trade setup examples. We've got several of them to look at today. All right, this material is intended for general information and educational purposes only. Options carry a high level of risk and are not suitable for all investors. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short risk puts purchasing the underlying stock at the strike price. Excuse me, I'll say that again. A short put risk purchasing the underlying stock at strike price when the market price of the stock will likely be lower. The paperMoney software application, it too is for educational purposes only. Investing involves risk, including loss of principal for some products and strategies, and loss of more than your initial investment. Now, there's no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends are not guaranteed. Quick look here, just a look at the futures slides as well. We do not get into futures trading, but we do look at some of those charts. And so just a quick note, futures and futures options trading does involve substantial risk. It's not suitable for all investors. So with that, here we are once again, looking back at the markets here and seeing the general dip that we saw here in the markets. As you can see, we just came down and bounced back up a little bit. Folks, we did break below this lower range, and we need to be mindful of that right there. You can see clearly it's a break below. Now, we could become, the question is do we just fire back from here, or are there a few things still going on which initially caused this volatility in the first place? Just trying to be, as straightforward as I can so that we're looking at maybe what still potentially exists out there in the marketplace in terms of possible risks that, hey, may in fact ramp up. We don't know what the case might be. We can't say on the chart, if we strip out everything and all our expectations about what could happen in terms of a move up or a move down, we have to say that we did break some lows here and we did come up. And what are we doing? We're getting a little bit right now of a doji, which is kind of like, it's indecision at that level, which happens to be right at resistance. In fact, you can see that a little bit better if we go to a 30-minute chart. You see that sticking out, folks? I think many of you use this now. My goodness, I just drew a straight line. I'm getting used to this mouse after all. Fantastic. All right. And by the way, Zinc mentions the VIX as well, right? It's retreating, and we're looking at that, and it might be resting on some levels as well. Let's take a look at the VIX as well. Hello to you, Mighty, and others joining us right now too. But keep that in mind, and we'll see, what we do get here in terms of, possible direction, a breakout from here or not, because we did break down. And one thing I do in my markets and sectors class, I do look at market posture. One of the things I just wanted to note, we have been holding, and pretty well holding above this 100-day moving average, which when we're talking about the S&P 500, we tend to hold above it on upward moves. A lot of traders will say, hey, it's one of the sort of moving averages that they might focus in on. You can see a touch point here here. We did break that, and where are we at right now? Well, we're right at resistance. So we're going to have to break back up above it. We're above the 200-day. That might even be a bigger one for a lot of institutions, that I've read about. They'll look at the 200-day moving average in blue there. But, that represents maybe this lower area here. You take that out, it's kind of another story. But intermediate, we still need to get back up above some highs to reestablish the intermediate term trend. So just park that in the back of your mind. Okay, now let's go over here. I'm going to go back to the S&P 500. And just a quick note, too. NDX, real briefly, you can see that technology actually up towards what? Resistance again. That is resistance. We haven't broken above that. We'd be up in here if we did, but we haven't done it yet. Now, here is the VIX brought up in the chat, and we did spike above, actually even above these highs. So that is the highest point that we broke above right there. The question is there still risk out in the market? What do you guys think? Is there risk, or have we moved past it all? Because that has a lot to do with our swing trades. Now, we are going to incorporate some growth today, and really looking at stocks that might be leading their industries within growth, and also a sector that's been it tends to be a little bit more durable, and it's been showing strength as well. That's what we're going to be looking at today because of this right here. What do you guys think? Are we done yet? A spike like that, are we just done? Is it over with? Are we coming down now? Or, and Zink mentioned this, hey, we did bounce off this level right over here. It's right there. There were some previous highs. We've used the VIX previously as we've used it as a support and resistance level, and it's tended to hold up at different times. You can see we bounced off that again. Here is the question: as I looked at this and tried to get some sense as to what might be happening out there in the markets. I know many of you have too. Sharon says risk. Every headline is risk. Yeah, Scott, I know there's a lot of that. The thing is that I don't ever remember, okay, in this Iran situation, just stripping away everything, all the politics and everything, just where we're at. Have you ever remembered the Straits of Hormuz being completely closed off? I don't know if it has. Not like this. There happens to be 1,000 vessels right now parked, within Saudi Arabia and others. Nobody's willing to go across the Straits of Hormuz. And, maybe, I don't know what would happen if they did go through and tankers started getting sunk. Is that a possibility? Without diving into too many of the details, there are a lot of devices still out there to do such a thing. And just a quick note on the Straits of Hormuz, as you're going around here, which is this is Oman, really quick. And then this place over here, this is the Straits right through here. This, folks, is Iran. So they have the other side of the Straits of Hormuz. They're literally that close. Now, they've been sending those drones to different parts of the Middle East and hitting specific targets, which are thousands of miles away, right? So this is just like in the little ocean area right next to it. I think there could be some risk there. Nobody's willing to go through right now. It's a huge bottleneck right now. And you just wonder, I think the U.S. has some insulation in terms of energy, because we do have energy here and we refine our own. But if global issues occur, that can also impact U.S. companies as well. So we've got to kind of look at maybe some companies that are not so associated with it. And that's kind of one of the main points I wanted to talk about, because I just, we're looking at this. We've had, one other spike like this over here. That was tariffs. And so here we are over here. And this can be very challenging. And you just don't know if it's done or not yet, because no ships are going through. I don't think a single one's gone through. There's a big bottleneck, like I said, of about 1,000 plus carriers right now. So just park that in the back of your minds as you're seeing prices come up. I think there could be the possibility. I just think traders collectively might say there could be an expectation for this thing to ramp up, because nothing's, I think, ships start going through again, it really starts to mellow out a lot, but we just haven't reached that point. We don't know what's going to happen. So anyways, that was a lot of information, but I wanted to just relay that to you guys, just in terms of, going through and just looking at what the news presents, and just just so we're kind of aware of it. All right. Well, that's kind of where we're at on that. But so I really wanted to talk today about looking at specific companies that might not be as exposed because they are within the U.S. markets and they're a little bit more insulated. I'm going to go ahead and just throw out here the sector grid 6-month. This is one I frequently do use within the markets and sectors class, just to give us a general sense of every one of the 11 S&P 500, right? This is the SPX sectors that you're seeing here. Plus, you got the S&P down here as a general guide. So one of the areas out here that has been showing some strength and leadership within the sectors, yes, of course, energy. You've seen some industrials as well, but also down here, utilities. And utilities is another form of energy, and sometimes some alternatives to, let's say, energy, sometimes, you know, might see strength, such as utilities. If I look at utilities right now, sometimes, even though you look at a utility and you say it's very, very, a lot of times traders will say they're quite stable, blah, 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 and anything can change. But they just say it's a little bit more durable, maybe a little bit more consistent in nature uh, at times, right? I just maximized it. You guys can see this. Now, over here, we have broken above some highs. And yes, what are we doing? We're kind of resting near prior highs over here. That's a prior high. It's a longer term high. This takes us back to like October of 25 last year. These years are going fast for me now. But there you go, 25. What do we say here? Well, it's one of the patterns that we look for in this class, which is a little bit of a swing trade. But now with this additional volatility, we're looking at other areas that might be showing some strength around that volatility. And right in front of us, utilities may be one of those. And by the way, do you guys see that? I mean, we've been seeing a lot of these things, but look at this off the bottom. We talk about these quite a bit. Shoulder, head, shoulder. Inverted head and shoulders pattern. The reason why I keep bringing these up is because a lot of, not all, but a lot of longer term kind of bottoms might form with this. And it's just something that we want to be mindful of, because those are swing trades too that we look at it. By the way, that would have been an interesting swing trade, all else equal, with the longer term trend. Now we're kind of in a different phase though, which may in fact be more like a flag. So what's happening with some of these companies over here? Let's take a look at just a few that have been showing recent strength. I highlighted one actually in that markets and sectors class. I was thinking about you guys in this class because we do so much of this over here. But CEG, Constellation Energy, do you see the flag over here? It's sort of, at least this portion of it has been a bit of a V bottom. There's one little area there that's a little bit of concern, and that is this down here. That money flow is really just sucking it up. I mean, bounce, 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 bouncing off the bottom. That's not necessarily what you like to see as prices are going up. Now, the RSI, it bounced a little bit, okay, but we just don't have a lot of volume coming in here, right, on this. And so that's just kind of like, what's up with that? Question mark. And that was kind of a bigger dip. Now, it was a strong price recovery. So something like this, you might just say, well, has it broken above the range yet? Because I can make the case for a higher high and a higher low and a possible flag pattern here, which could be actually, it could, because we've seen these before. A move like this could come in and really bounce up, and you'd be looking up somewhere near these highs over here in terms of like a possible price projection, right? We've gone through those a little bit. By the way, Will, you're fine. Late pass is accepted. Okay. Let's come up here. Always accepted here. By the way, we just started, so you're in good shape here. But we're just looking, and so that could be something to look at. It's kind of a flat pattern too, and sometimes there's a lot of strength that could build up in this. We could get a bounce and a break. Let's hit another one right now, because I want you guys to choose between a couple of these. Just as a poll in the class, I want to take a look here. Here's NEE. This is next era energy, and over here too. let's just go to the Analyze tab. They're both in utilities. Okay, now this one is, clearly distributes, transmits, stores, generates electric power. Now, one of the key things and one of the key drivers or catalysts we have to say with utilities, what it has been in this environment is AI data centers and the demand for AI. Okay, so if you're using an AI search relative to a Google search, an AI search is about 10 times the requirement of energy. When we say energy, we're talking about electricity. Okay, that's what's building out. And it's we know it's extending through a lot of different industries, right? Just to give it kind of a baseline as to why we might be seeing this over here is the visual that we just looked at on the charts, right? For utilities, there might be some strength behind this. But in addition, there are alternatives to energy. When you have energy over here, and I'm talking about, oil specifically, oil, which is really shot up a lot. Other alternatives might be, yeah, we know there are other forms that can be used in different ways, electric, and there's also nat gas. Nat gas is another one. Now, nat gas is right over here too. So these guys they do as well, do nat gas. They also have some others in there too, but nat gas is there. It's a little bit different chart over here in terms of what we use with that money flow. I mean, it's been going higher. It's not like what we saw with CEG down here. Now, some of you might like the chart pattern on CEG, whatever the case might be, right? But here's a little bit of a pullback. And, we're kind of holding that round number here around 90. And so I want to throw this out to you guys because I want today to either look at, and we can actually do, maybe I'll just do both. Maybe I'll just do both. Let's just choose one. We'll look at a stock trade. And then I'll also look at like a short put or a short put vertical on these as well. Okay, because of the fact that the VIX is up, implied volatility is higher, and that's made some of those premiums a little bit more expensive, and that's good when we're selling them, right? We can get more bang for the buck, all else equal, that is. So I'm just going to do this. I'll look at them again. Okay, select between. Okay, we'll see the first one with CEG. The next one is going to be NEE. There could be others, but I just want to kind of go through this, folks. And if we can get at least 30 votes, that would be great. They say, the minimum size that you want for a sample is roughly 30. But if you guys could take a look at it, let's do it. Either one of those two. And then we'll give it about, 20 more seconds and we'll hit it again. Here's NEE and here is CEG. Now, both might be positioned for strength given what are we basing this on? The industry showing strength as well. The industry, let's just do that again. Here it is. We might see industry drivers, like we said, because to get an entire industry to go higher, like we're seeing here with the utilities, a lot of times there has to be, not every time, it's rare. I mean, it's very, very common. I'll put it that way, that you get the good old fundamentals in there to drive a whole sector up. Oftentimes it's not just one stock, it might be a whole group, and that collectively can help the individual stocks go up. So, I mean, it's possible if the sector continues to go up, maybe both of those go up. It just remains to be seen. All right, that'll be enough of that. Let's go back and we'll select one here, and whoever it is, we'll select it. Ready? Let's go. Let's just see what our poll results are into the chat, and it looks like NEE for the win, and it is. Now, it's not to say that you can't do CEG. We're just doing paper trades, example trades. So feel free to do it. But Kevin, he got a feel and he was right. Yeah, okay, good. Okay, either way. Yeah, that's great. Let's take a look at it right now. I will say this. RSI, money flow, both showing a little bit more strength here. Not to mention the trend. We did get higher highs and higher lows. So collectively, you guys, the technicals really won on this as well. Now, a couple of different things as I zoom in here. Let's zoom in now and really just focus in on the chart. Now, have we have we made yet a high, a close above the high, the low date? Technically we haven't, because it wasn't the previous bar. It was this guy right there. It was this bar, and that bar, we touched off the high, but we haven't broken above it yet. So some traders might say, you know what, Mike, I'm not going to do it yet. But what I will do is I will consider it if it breaks above that level. Now, let me just show you, because this is why I use like a daily and a 30-minute chart, so I could just get a quick solid glance. One click, and now I can start to look and see what that actually looks like over here. So if I go back again, if I really wanted to break this down, I'm really kind of saying, hey, what is here in terms of resistance? What is it? Well, maybe over here. That's kind of a bigger level. And so maybe I want to see it get above here for a stock. Now, it's not to say that you couldn't buy if you wanted to. Hey, because we like to go through these strategies a little bit. 50 here, 50 here on the breakout, if it takes the breakout. I'm going to throw that up as an optional today. We didn't get the close above the high of the low day yet. We haven't really broken above this resistance. And I mean, we're not really giving up a ton here. If this thing is going to really run, let's look at it this way. If this thing is really going to run, and it's, let's say, a little bit more insulated relative to the current market situation with Iran, okay? And how is it done? Under the current market situation with Iran, how have we done? We've held up pretty well. So that can give us some insight as to what might happen if all heck breaks loose. Sometimes, like we said, there are alternatives, and alternatives get some love. Electricity, nat gas, nuclear, etc., that these guys provide, and it could actually be a growth mover. That's the question. But it has been showing growth because it has been getting a little bit of love here too. All right. Now, before I dive into that, I want to go over here and just show you under the watch list. I threw some of these companies out so we could take a look at them here. And I want to show you guys, like, for example, NEE over here, a couple of different fundamentals that can be used here too, that I think, can help traders get a sense if, just to confirm, is there also growth in these companies? I've thrown them out and you can see them over here. But this is referred to as gross profit margin. I did want to tap into these growth concepts because we're not just going to trust the visuals of the sector chart. We also want to dive into a couple of these. Now, what is gross profit margin? Also noted as GPM by accountants. I know that's, I'm a bit of a background in accounting, right? And that's what I look, that's one of the things that a lot of accountants, and by the way, people that do finance will look at gross profit margin. And all that's saying is how much of the revenues are left over after you subtract out all of the direct costs, DC for short, associated with this revenue, creation of that revenue. That, folks, is your GPM, your gross profit margin. Does that make sense? It lets you know collectively how well they're doing. Now, if you look at Constellation up here and Next Energy, much, much higher as it stands right now. This is the current gross profit margin, okay? This is money that could be shot over. So you're shooting, like right now, 62% and change, 62.2 approximately is the GPM. So how many of those revenues are actually shot down the income statement after you get past your direct costs of the creation of that revenue? 62%. That's one of the highest I have in here. They're very, very, keyword comes up here, efficient, and that can make them very effective in generating the 3-year. Now, the 1 year can be stronger than what we're saying right here, but there's been a lot of growth in this business, okay, as of late. This one might have grown and maybe kind of dying off a little bit, but maybe this is one of the up and comers. That's a big one. Of course, earnings per share, we're using a 3-year average. Real quick note, I don't know if you guys caught my update on this. I talked about this in my ThinkScript class because I do give you updates because we use a lot of these in ThinkScript. But like this, these fundamentals have really been enhanced lately. And what I mean by that is, okay, the data has really improved. I mean, it's like substantially more accurate. Okay, the data that we're seeing, and that's new as of like within the last 5 months. And so it's really great to see, because I am a fundamentalist too. I like to look at fundamentals. By the way, that's the current right there. Yeah, that was the current. This is the 3-year average. How do you get these? Just click. You can find them in here, customize. A few of these are in here. I've added them in. Now, a quick note on the earnings per share. What's beautiful about this is we can click over here to the right on the under our columns. Notice I had to select that myself. There's the current earnings per share, but then there's also the 3-year average. I like to look at the averages and just see, is this company running the show? I mean, can they do it for more than a year? What does that look like collectively? And are we seeing growth? That 3-year average, folks, is used by a lot. Institutions will frequently use a 3-year average for growth. And like I said, sometimes you can just find growth even in utilities under the right conditions. So maybe we'll see what happens there. But that's a key note. Now, the same thing with some of these other stocks we want to look at. I kind of gave it away a little bit because these are some of these other ones that have been growing. We'll hit those in just a second. But for now, we're hopping back over to NEE after a little pause, but we had to pause because it's part of our underlying conditions in the market. Now, the VIX that we looked at, yeah, the VIX high. It's high. It's up there still. We're at darn near 25. In fact, we've come up just a little bit since we've talked. We're up a little bit, all right? And it might not be done yet. And when that goes higher, what does that do? It can help to inflate the values. I'm going to get this set up so we're all good to go next time. So we've got everything lined up here, but let's just do a quick delta, some option Greeks here to look at real quick. For every 1% increase in implied volatility right here, it can impact the value of the option by the amount of the vega. And you can see these are actually quite high. And by the way, what are we at, 28? These are going to be quite a bit lower. Where's the VIX at? It's a little bit lower than this, but that can help to influence the value. And that's positive. We are in the Aprils, by the way. We choose oftentimes 20 to 50 days out when we're selling those option contracts. Okay. We said what to look at when we're just going to be doing possibly a stock, maybe a break above that range. But for now, maybe we can just create one with a little bit of a buffer zone. So we might be looking at a delta here, an expectation of about 29%, just using some of the option Greeks, and they'll use the delta as an expectation. Again, the delta represents, folks, a $1 change in the underlying stock. It will impact this range, this option range, by the amount of the delta. If prices go up, what does that do to our delta? Well, that's a 29. You can't really see it now because I've kind of covered it up. But right there is a 29, and it will reduce this quicker over the 38 days left remaining. There's the 87.5. We're choosing, I mean, I was just looking over here. There's a couple of different things we could look at. There is the 85, which is real close to about $1, just as a short put. And there's also this 87.50 if we did a short put vertical. Okay. But if I was just selling the 87.50 alone, selling this put, and remember, we maximize, we get our max gain when this is all the way to 0. But let's just say we shoot somewhere in the middle in here. I'm just going to say like a 1.5, I don't know, 1.52, somewhere in the middle to get a little bit more bang for the buck if we can get it. I just put -1. If you look over here, that's about a $1,400 buying power effect. The max loss is a little bit higher too. That assumes if the stock, we get assigned shares, if it goes below that level, which, would be like kind of the expectation of the investor, it goes below that level, we get assigned shares of stock, is what they would be anticipating. That's obviously the very common outcome. But we can change that, the 152, if we went over here and we sell, let's do that again. We're going to sell this 87.50 and we're going to buy the 85. Now, a quick note, I just want to highlight this. This is currently at over 4 million, close to 5 million shares a day trading. That can help with also some interest in the options. This happens to be 1,000. We're over 1,000 in open interest. So we're in the 1,000 range. A lot of traders will want at least 100. We're there. Let's go ahead and we clicked on bid. I'm going to hold the control button on the keyboard and buy the 85 for a short put vertical. Now the thing is here, we were getting about $1.52 or $1.50. Let's just say about $1.50, right? For selling the 87.50. But we can now define that risk better by going over here and just saying, well, I'm going to add a couple more contracts so we can get to what? Well, somewhere close to that credit we were getting before, which was, I think, was about 152 or so. I had it at 152. I'll just say approximately 150, $150. Okay. But our buying power effect, less than half of what it was with the short put. This is where it's a really big one, though. Look at the max loss. Do you see how we're seeing here in the dialog box, folks? It's defining our risk for us. Okay. I'm going to go ahead before I send this through, though. I want to state this. If it starts to work against us, one thing traders may do is they might say, well, Mike, don't we want to have maybe a way to try to exit this too in the form of a stop that we talked about during our disclosures earlier? Yeah, we can do that too. If we thought that, what did we say? The expectations here were, approximately 29% according to Delta, and there may be higher expectations. There might be higher. Yeah, well, there could be a higher expectation from the viewpoint of a trader because we're building on the trend, a price pattern. Maybe this holds up better in current market conditions. Perhaps it does. Okay. All these things in the mind of a trader could say maybe there's a higher probability than 29% that we're going to go below 87. Maybe they say I'm just throwing a number out here because it could factor in. Maybe they cut it in half. They say, well, I think there's a 15% chance, even though it's a higher delta based on everything else we looked at, growth rates, technicals, things like that it will go below that 87.50 by expiration. So I'm just throwing out concepts, ideas, so you can kind of understand that. I'm going to go down here. I've got first triggers. One cancels the other. And what we'll do, either way, we can blast through this, or just first trigger sequence is fine. So when this triggers, we've got another one, and I'm going to go ahead and just right click, create opposite order here. And if I say I can get 54 cents out of this, is what we're going to get right now, some traders will say, based upon the expectations of success, they'll say, well, I'm happy to take that, but if this 54.54 goes up, folks, times 2, get me out here. I'm only willing to risk. We'll try to set this up with a stop, right? So it hits that level, but I'm only willing to risk what I was going to get. So if I'm wrong, it's a 1-4-1. I lose what I was expected to gain. Now, if their expectations are 80%, I'm just going to throw out a number. That might be something that could work. 80% for the win. For winning 80% of the time. Question mark, right? Whatever those expectations are. We don't know, but we're using deltas and other things to help us factor that. If it goes against us, I'll give up what I was going to make, or at least try to get close to that with our stop. Okay? So 108, let's go ahead and plug this in right now. 1.08. If it goes against me. Okay? Now I'm going to go over here and I'm going to go ahead and just go good till cancel. But this is just all for the option itself. Okay, let me just make sure we're all on the same page here, folks. This is a day order, by the way, and notice everything lined up over here. So how are we looking over here? Everybody good? Thumbs up? Let's go back to our trade tab again. What are we looking at? We're just looking for prices to hold above. Basically, it's in the middle of this range. Hold up through, that's where our short put is. So we're saying, yeah, maybe the 90 holds, it bounces around here, but we're trying to define that risk as well. Okay, so let's do it. Let's go over here We'll put that trade on, and then we'll go to another trade that's outside of this group, but might be growing fairly, strong. Let's just say it could be going, how do I say it? It could be stronger depending upon where we're at right now. Okay, so we got that trade in. Okay, so let's go into our next couple. Now, I looked over here. You'll see it right over here where we're focusing in on. Let's go to, this is one that actually, if you look at the Mag 7 group of stocks, it's another company out here, Google. It's definitely in technology. It's tend to be holding up a little bit better around that 300. I will say this. I mean, we haven't really seen some strength yet, but we have been coming down. And so too have our indicators. They've both been dipping a little bit. We did break above maybe a short-term range on this bounce, but this is a big question. Where do we potentially take a trade at here? Did we close above the high of the low day? We're dang close. I mean, we're super close right there. It's just like, that's our low day because it was such a big range. But folks, we're still kind of in that area. So that's the question we need to look at. Are we going to get a little bit more confirmation or not? Because we did test these higher levels today. And if we were looking at this, one of the things I talked about in the prior class was, we have to be very, very careful about that volatility too, particularly on tech. Although tech's been holding up maybe a little bit better than some of the S&P 500 companies, but reducing position size when the volatility is high can help us kind of manage some of the risk if we just have smaller position sizes. It just stands to reason, right? That would be the case. So there could be something here. This is so close, though. We almost kind of want to get confirmation as opposed to a mini shooting star over here. So can we maybe trade above and hold that level on a short-term basis? That's the question on this one here on Google. One of the stronger ones for sure. Now, what I'm going to do, we're just going to put on a very, very small position here to start us out. And then if it does go south on us, we could just have a smaller loss because it hasn't broken out yet, right? But there is like a bit of I just have to say it, a lot of times the trend line break will lead the bounce. And we got that maybe near a double bottom here. Okay, back over here in our Google. How are we doing over on Google? Let's see for our growth metrics. How much after direct cost to the creation of that revenue? You guys know that? Almost 60% goes to heads towards the bottom line in a sense. That's 33% growth rate over the last 3 years. Think about AI and growth potential there. Well, could be a reason for it holding up a little bit. Let's go ahead and put a trade on, but we'll wait for further confirmation for more of like a greater addition. Oh, by the way, folks, before I do this, folks, I did notice that, yeah, some of you have hit that like button. It does give me good feedback if this is informative and useful for you. Guys, if you are getting insights out of this and value is the key word, right? If you're getting that value, smash that like button if you are getting value. But it's great to have you all here. In addition, yeah, follow Barb and I on X, Barb Armstrong CS, Mike Fairbourn CS, and of course, love to have you guys follow us too on our YouTube channel. If you're not already there, I'm going to give you the link right now so you can easily follow us on YouTube, our Trader Talks channel, and you'll see over here we are above right there. I'll zoom in a little bit. That's our current class going on right now, but we are above 184,000 now. So we'd love to have you join, and you have great access to everything. We've got playlists, etc. I'll throw this into the chat and just hit subscribe. By the way, I think at the bottom right-hand corner of the screen, you can still subscribe if I'm seeing that there. But anyways, I'll provide you the link, folks. And there you go. Oh, thank you, Barb, for posting that, as well as Barb Armstrong CS. My favorite is perfect. All right, well, let's do it. So let's go in. I'm just going to do a smaller initial point because we don't have that confirmation in a lot of volatility. I'm going to do a bracket order on it still, nonetheless. Whoops. Let's do that again. Why am I'm deleting it. Hold on. Oh, There we go. Our bracket orders. Okay. So here we go. I'm going to go. This is going to be very, very small. It's an expensive stock, but we don't have the confirmation. I'm going to say maybe start a potential position here before the end of the day. Here's our GTC. Good tail cancel. Good tail cancel. For a swing trade bounce. I still need to show you guys that real quick. But let's just go ahead and I'm going to show you where our range is going to be. I'll set this down a little bit and I'll adjust it on the chart here for us. A quick look at our tab there, buying power effects, etc. Put the trade in over here. While we're waiting for that to fill, it's kind of a tight range. But what I was going to say is if this is a bounce and we are looking at a bit of a measured move, like on the low end here, or the swing trade follow through, it's a very, very short term move, but we could be looking at a target up to the next high, which is about, what's a little more than $10 right now because we're at 307, but it's very, very short term in nature. This could be days. So I'm going to put it right up to that level and click on send. Now, we also need to keep this also kind of close on the other side in terms of the possible exit. What traders will do sometimes is they might look at 50% range. Is very, very common with a lot of traders below the prior bar as an exit point. Okay, now the last one, I think we have time to throw it in here, but a couple of companies I want you guys to select from. So let's look at those. Now, these are kind of higher growth rate, more as of recently, and but they're a little bit more, you'd have to say, a little bit more speculative in a sense. This is Kava. Now, I did put a trade on for us yesterday because I wasn't sure what would happen because we were closing above the high of the low day. And I put like a general range in here. That's not lined up the same, but if this is a flag pattern, I'm going to go ahead and adjust my target up a little bit higher, which, folks, again, where does it put us up? Right near 100. Isn't that funny how that happens? Right near prior highs over here. By the way, I'm going to put the stop, though, level just below this range right there. Everybody see that? So this is actually the trade I did on this last one because we are just about out of time. Here is IMAX. These guys have been trending. You guys can, oh, by the way, real quick, you can probably see post earnings some strength. And by the way, we filled an important gap. Whoop, gap over there, right there. And now we're pulling back to the prior high. Bounce potential, we'll see. I had to do this one earlier, but here's IMAX is our final one. And you can see the possibility of a, well, not the possibility, it did break out, but maybe the possibility of a bounce right there as well. This too, with higher growth rates, post earnings, both post earnings moves, folks, pull back to prior highs, even during kind of risky environments that we found ourselves in. And by the way, just a quick look at those over here. Kava, gross profit margin, as well as IMAX. Look at that, 60%. You're kind of high over here. Now, like I said, this is kind of an up and comer, but look at these companies, a little bit more speculative for sure, but they're also growing as well. Wow. Okay. Quite a bit today to look at. Of course, we had to do that because of the situation within the market and the VIX. And so we really wanted to build some of the swing trades today, folks, around growth. We went through those growth parameters for you. And then we broke down some sectors that were also showing strength as well. So again, folks, if you got value out of this presentation, smash that like button. Great to be with you. Hey, I look forward to future discussions. And thank you so much, Barb, for your help in the chat as always. We'll hit more in our Think Script class on Thursday. Take care, all.